Good morning, traders. It is 8 a.m. Chicago time on the 14th of April 2016. It is Thursday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A quick rundown of what we've got so far. Um, Indices across the globe, the main indices across the globe are all up. With the U.S. and Europe being the weakest. The S&P 500 up only 0.12% or 2.25 points right now. The Nasdaq's up three-quarters of a point. Uh, the Euro stocks and the DAX are up 0.9 or almost 1%, leading the rally here. The uh, the CPI data came out just about a half hour ago. The March month-on-month came in at zero point 0.1 versus zero point 0.2. Ex-food and energy came in at zero point 0.1 versus zero point 0.2. But the blowout here is initial jobless claims coming in at 253,000 versus 270,000. This is the lowest reading for initial claims since 1973. Since 1973. That's it's a pretty big record there. Continuing claims 2.17 versus 2.18. We had comments also from Fed's Lockhart. Says he'll not advocate for a rate hike in April. He has changed his view on the April move. There's a little bit of uh, uh, economic information that's pushing us around. Fed's Lockhart's due to speak again at 9 Central, 10 Eastern. Also at the same time, Fed's Powell. We're also getting at noon Central, 1 Eastern, we're getting Bank of England's Carney. And we're getting also at 3 o'clock Central, 4 Eastern, Bank of England's Shafiq at the IMF. And then as far as economic releases for the rest of the day, we just have natty gas at 9:30 Central, 10:30 Eastern. Let's have a look at what we expected yesterday versus what we got. Let's switch screens here. There we go. So yesterday's primary hypothesis, as you see here, is for um, an attempt lower, but generally looking higher on on hypo one. I was looking for somewhat of a pullback. Um, a pullback would have been nice, but the market ended up playing out hypo one, but not the way that I would have expected or liked. But I don't get to dictate what the market does. So it did not have any pullbacks at all. It basically just chopped around on the open with an upward skew and then just continued higher, got to 2078 yesterday versus a pullback, which would have given us a really nice base, an exam of the um, lower prices would have advertised prices lower and enticed more buyers and given us a more substantive rally, but that did not occur. The point of control on this composite is right there. That's why I expected it to pull back. I expected that to be a magnet, but it just did not work that way. I'll show you Hypo 2. Hypo 2 was similar with a push up at the open, but the expectation on Hypo 2 is failure back into the prior range. Failure back into the prior range, and that didn't happen at all. So there's no sense in discussing that. But that's the normal. That would be the normal expectation for a pop-up out of balance. The first test is likely to test lower, then bounce up, which was hypo 1. If not, then it's likely to fail through and back into the range, which again did not happen. So hypo 1 led the pack yesterday, but hypo 1 did not get what I drew. Looks something like the overnight high being taken out, a push down to here, and then a rise to 75 or so is what I drew for Hypo 1, but that's not what we got. It basically just was a grind. The pull down, the push down did not was not of any substance really down to 64. It did end up taking the overnight high, and it looked like for a moment there, it looked like it was likely to rotate down, and it did for a little bit, but then it just drove up. Yesterday is the exact kind of day that I'm not good at. I've been trading long enough to know my strengths and weaknesses, and yesterday's the kind of day that is not made for me. So I didn't do much with anything yesterday. A couple of shorts. I think one was in here for this rotation, um, or something. I don't remember, but it just I didn't see all that much opportunity. You look at yesterday's profile, and you've got a main distribution here, then a middle distribution, and then we have this little distribution at the top. The distribution at the top looks like the it ended the trend prematurely. The market did not have enough time to move the point of control higher, but it ended up trading. If we zoom in here, we traded a fair amount, and the market never found its sellers. It pushed up here on the last between 2:45 and 3 Central, the last 15 minutes of the cash, and it rotated down a little bit, but it never really rotated completely, meaning it found its sellers and it's starting to turn down. It finished near that high with an HVN. What does that tell us? That tells us we're likely to see a higher high in Globex, a continuation of the trend, and that's what we got. Note the overnight point of control is right in line with this HVN. We have basically whatever participant came in yesterday at the close continue to participate into the overnight session, and we're above it now. The overnight low, coincidence? Down at the point of control, 2068.50, it pushed right into the most valuable price overnight before it bounced up, and then it puts in the overnight point of control right against this HVN, as I just said. The market is methodical, intermediate to short-term traders in control, respecting the short-term levels here. So this is what the overnight looks like. A grind down, finally tests the prior day's point of control to the tick, and then starts to move up with a strong pop here on the 7:30 news, on that jobless report, and we're up against the highs. We've got another HVN on built on the high in the overnight session. 254,000 contracts traded so far, so that's basically in line. You could see that the overnight session had negative inventory for a good part of the session, even though prices tried to maintain the closing price multiple times, and now the inventory is basically balanced. What does that mean for us? It means that we are likely to see a pretty choppy open. This morning, looks like we're opening slightly out of range currently, but overall, the expectation is for an open auction out of range. In either case, we're expecting an open auction on the open in new territory or new recent territory. So it's likely to be a fairly choppy open. Again, a continuation of the same theme. We had the same thing yesterday here. So not much to add here. I don't want to keep rambling on. Notice the gap zone. If you're using the flex levels indicator for IRT, I've updated the levels for them to reflect on your charts. I've removed the naked point of control that was here at 72 and a quarter, the naked gap, and then the prior week's highs. The market is still one time framing up. As we have talked about, we could not breach the 2026 below. And as mentioned on Monday, the market has an upward skew for the week. Here's the 2026 That's last week's low. The week after that, before that's low. The week before that's low. So the market is one time framing up, and it continues to do so. And then, despite the fact that we took out this lower high last week compared to the prior week before that, the week of the 28th, we ended up pushing higher. So we're breaking out of this kind of a compression formation on the weekly to the upside with a gap zone beneath us. The gap zone is unauctioned, therefore we mark it on the chart as almost like it's a single print or a gap, and it is a gap zone. And that becomes a magnet for later. As we fail through the 68, I become very, very interested in this gap zone below. So that's how things are shaping up right now. As far as what we're looking at for the open, I'm looking for an open auction out of range. I'm looking for an open auction period. Whether it's out of range or in range depends on whether it breaks into this high from yesterday or not. You know, it's as long as if it falls below the 77 high, then it's opening in range. If it doesn't, it's opening out of range. The difference is out of range gives us a better view of how the auction's playing out once it breaks the opening swing high or low. That's why I note and post the opening swing every day. It gives us an idea of what the first, the market on open orders, the first push high and low are, and then we start to measure the behavior until the IB is in based on that first high or low. And so the expectation today is for an open auction out of range. I'm looking at when I look back at the template day. Remember yesterday I mentioned that the 1204, December 4th, was a template day, and 76 was the level to look for. 76 was the high of that day. Now we're above here, and we are templating the 2nd of December, and the 2nd of December has a very clear low volume node at 2080, and that becomes a key target. 2080.50, and that becomes a key target. The key target for today. December 2nd has an upper distribution with the point of control at the high early in the session. Then it moves the distribution down. Then it has an LVN zone, and then it ultimately ends up moving the point of control to the low of the day. Having a triple distribution that day with this 80-50 being the key figure up here. The high overnight 79.50 will miss it by 4 ticks. So if we take out the 80.50, then we're looking for the next high volume node, which is up here. It's a 2-day high volume node at 83. You can see it here. High volume node, the first and second, and that becomes the secondary target, and I expect it to stall out up there at 83. So that's what we're looking at for today if it decides to push higher. So with an open auction out of range, again, the normal behavior is expected to test lower. The value high is valid from yesterday at about 72, I believe, 73 value high, and then the expectation is if it does not fail through, then it's likely to push through to 80.50, get a small bounce, fill in the LVN a little bit, and then push to 83. 83 is the figure up here as the next price up. That would be Hypo 1. Hypo 2, same thing. Open auction out of range and attempt higher, finding sellers, rotating down to the value high, unable to get out of or tests out of the prior day's range, then fails through and retests the 68.50. If it does not hold the 68.50, which is the overnight low, then it's likely to continue down to the gap zone, and then we have the gap zone at play. Note that the 61.25 is the gap zone mid. That'll likely be the first test if we push in. Okay, so that is Hypo 2. Hypo 3 is an open, a brief test, and then a continuation higher into the monthly high at 86.25. This this rotation here is expected to look like an open test drive, and it's expected to have a driving behavior, and essentially we end up with the same action as yesterday. I know that's a lot to go through, but it's trading, so it's something you have to kind of put together. I want to remind you that today we have an open AMA. The AMA link is underneath this video on YouTube. It's also on Twitter, and it's on the Stage 5 Trader Bite page as well, right under the video. If you want to register, taking questions till about 11:30 Central, 12:30 Eastern, and we'll close those off, summarize the questions, try to address them during the session, try to make it as useful as possible for you. Good luck and take care. Bye.